How to invest in stocks. A complete beginner's guide to the capital market. Hi, everyone. Welcome to the channel. If you are just starting to explore the world of stock investing or want to improve your strategy in the capital market, this video is for you. We'll explain everything you need to know about how to invest in stocks wisely and how to navigate the capital market to build a safer and more profitable financial future. This is a complete guide for those starting in the stock market, with clear explanations and valuable tips so you can start your investment journey right now. Before we move on with the video, don't forget to like, subscribe to the channel, and activate the notification bell so you don't miss any tips on how to improve your finances and investments. What are stocks and how does the capital market work? First of all, it's important to understand what stocks are and what the capital market means. So, let's get into it. Stocks represent ownership in a company. Now, when you buy a stock, you're becoming the owner of a fraction of that company. This means that if the company performs well, you can earn money through stock appreciation and dividend payments. But if the company struggles, your stocks may lose value. The capital market is the environment where stocks are bought and sold. It includes stock exchanges like B3 in Brazil, NYSE in the United States, and others, where companies offer their shares to the public and investors trade those shares. If you still don't fully understand the concept of stocks, leave a comment below and I'll explain it in more detail. 1. How to choose the right stocks to invest in. Choosing the right stocks can be challenging, especially for beginners. There are some strategies and tips that can increase your chances of success when picking stocks to invest in. I understand the company's sector before buying a company's stock. You need to understand the sector it operates in. This is important because a stock's performance is often closely tied to the performance of its sector. For example, technology, companies like Apple, Microsoft, and Tesla show strong growth potential due to high demand for innovation and new tech. Healthcare, companies such as Johnson & Johnson or Pfizer often perform well during pandemics or public health crises. Energy, renewable energy companies like NextEra Energy are gaining attention thanks to the global push for sustainability. B. Fundamental analysis. One of the most popular approaches to choosing stocks is fundamental analysis. This involves studying a company's fundamentals, such as profit growth, management, debt levels, cash flow, and more. You should start by analyzing earnings per share, how much the company earns per share, which can indicate profitability. Price-to-earnings ratio shows how much you are repaying for each unit of the company's profit. A lower PE might suggest the stock is undervalued. Debt levels. Check if the company has manageable debt. Highly indebted companies may struggle during economic downturns. C. Diversification. Don't put all your money into a single stock. Diversifying your investments across different sectors helps reduce risk. If one stock drops, another might balance out the loss. Diversification is one of the pillars of smart investing. Do you already have any stocks in mind to start investing? Leave a comment below and share your ideas. Let's talk about the best options out there. 2. Types of stocks. Understanding the differences in the stock market. There are different types of stocks, each offering advantages and disadvantages. Let's look at the most common ones. A. Common stocks. Common stocks give investors voting rights at shareholders' meetings. This means you can influence important decisions like mergers, acquisitions, or changes in management. Common stockholders may also receive dividends, but they are not guaranteed every year. B. Preferred stocks. Preferred stocks don't offer voting rights, but they give priority when it comes to receiving dividends. These are popular among investors looking for passive income, as companies usually pay more frequent dividends to preferred shareholders. Do you prefer stocks that give you voting rights or priority on dividend payments? Comment below what you find more interesting and why. 3. How does buying and selling stocks work? Now that you understand what stocks are and how to choose the best ones, it's time to learn how to buy and sell them. Choosing a brokerage to start investing in stocks. You need to open an account with a brokerage. A brokerage is a platform that connects you to the stock market and facilitates the buying and selling of these assets. Some popular brokerages include XP Investimentos, Clear, Rico, and Model May. When choosing a brokerage, consider brokerage fees. Some platforms offer zero commission trading, which can be great for beginners. Trading platform. The platform should be user-friendly and offer features like charts, price alerts, and market news. Buying process. Once your brokerage account is set up, you can buy stocks in just a few clicks. You'll need to choose the company, enter the stock code, and the number of shares you want to buy. C. Monitoring performance after buying your stocks. It's important to monitor their performance regularly. You can use tools like TradingView, Investing.com, or your brokerage's platform to check prices, market fluctuations, and company news. If you've already chosen your brokerage or have questions about picking one, leave a comment here so I can help you choose the best platform. 4. Stock market risks and how to minimize them. Like all investments, the stock market involves risks. Here are some of the most common ones. Volatility. The stock market can be volatile, meaning stock prices can change quickly. This allows for quick profits, but also quick losses. Volatility can be managed with diversification and a long-term strategy. Sometimes, it may be hard to sell a stock quickly at a good price. This is known as liquidity risk. To reduce it, invest in large, well-established companies that typically have high liquidity. C. Credit risk. If a company you invested in starts facing financial problems, it could declare bankruptcy. In that case, you might lose part or all of your investment. To avoid this risk, always perform fundamental analysis before buying any stock. Have you already considered the risks of investing in stocks? Share your concerns in the comments, and I can help you better understand how to protect your investments. Investing in stocks can be a great way to grow your wealth and achieve financial independence. But as we've seen, it's essential to understand the market. Choose the right stocks, diversify your portfolio, and be aware of the risks involved. If you enjoyed this guide and want to learn more about investing in the stock market or get other financial tips, subscribe to the channel and turn on notifications. And if you have any questions or suggestions for topics, leave your comment below. See you in the next video.